The following podcast was recorded on Thursday, February 16th, 2023, featuring Sam Rines of Arbor Data Science. To hear the podcast in real time, you can sign up for a free trial at arborresearch.com or by emailing Gus Handler directly at gus.handler@arborresearch.com. You can also call Arbor Research and Trading at 1-800-606-1872. Thanks for your time and enjoy the podcast. Welcome everyone to the latest edition of Talking Data. I'm your host, Kristen Radosh with Arbor Research and Trading. Joined today by our commentator, Sam Rines of Arbor Data Science. Good morning, Sam.
Good morning, Kristen.
Today, Sam will talk about yet another reopening. Sam, China, it's reopened again. Recall it was the first to reopen after the initial COVID lockdown. Will China be rejoining the global economy to provide optimism needed to boost a slow-moving economy?
Yeah, at some point. This is where I think everybody kind of got a little bit ahead of themselves with, the announcement in late November, early December with the rumors, and then, oh, look, it's reopened. Everybody kind of jumped on the boat that it was going to be this tremendous boost instantaneously to the global economy, and that's simply not true. You have to have COVID run through the entire population first, then you slowly reopen and people feel safe to go back to their jobs. I mean, we've been through this, numerous times. We did it the first time around, then we did it with the variant early last year, and it takes time, and it's going to take time in China. China's a billion people. It takes a long time to spread through, not just cities, but also the countryside. This is something that is at least going to take until the beginning of the second quarter, if not into the second quarter, to really begin to take hold. And I think part of an interesting way to look at it is to say, hey, what's going on with the ridership in Beijing, Shanghai? That's one way to look at it, right? You see that it just fell off a cliff after they reopened. It was not like everyone went back to the office and was joyous. Everybody got sick, and they got sick very, very quickly. And this is where I think it's also important to take a step back and realize that a lot like the US, it's a much different world as you reopen, right? We're not reopening into 2019 type metrics. We're reopening into a world that really remembers COVID and had their habits change. And when habits change, so do people and so do their actions. So maybe metros aren't the best way to look at things.
Does China's reopening pose a risk to inflation? Could you touch on oil demand and energy prices?
Mm-hmm. Does it pose a risk? Yes, it poses a pretty significant risk to inflation, but I think it's a little bit of a different type of inflation than we've seen in the past with China, right? Normally when China stimulates their economy, they're stimulating with real estate, they're stimulating with capital expenditures, heavy stuff, copper, concrete, that type of deal. This time around, it's been kind of, call it trial balloons, maybe that's the wrong terminology these days, but trial balloons that they were going to do a significant push on consumer spending. The consumer has saved a significant amount of money in China. They're sitting on a lot of savings, and maybe that's the way they stimulate this time. There's always been this optimism around the Chinese consumer, and the Chinese consumer has never really come through in a meaningful way. But there's this optimism that maybe they will this time. That would have a significant effect on inflation, because consumer spending is two things. It's goods and services. And much like the US consumer, when the US reopened, the US consumer did a lot of revenge spending, first on goods when they wanted to be able to live in their house and have a little bit more comfort and joy. And then on services, when they could go out and go to the restaurant, go on the vacations that they missed, et cetera. There was a lot of revenge travel and revenge spending. It's likely that we're going to see a similar dynamic in China, but on a scale that is pretty much unheard of. And that's really important when it comes to energy markets. Right now, we just had the announcement that Russia is going to cut its production voluntarily by 500,000 barrels. That doesn't sound like a lot. But Russia was already down 500,000 barrels from a little over 500,000 barrels from its 10.5 peaks. Now you're looking at Russia putting out about 9.3 to 9.4 million barrels a day onto the market. That is much less than what was anticipated for the year. China coming back online is probably worth 1 million barrels a day, so you can kind of do that math. Russia took off as many barrels as China's going to demand. in just a little over 6 months. So there's a significant dynamic here that could be problematic for oil prices. A significant amount of demand emanating from the Chinese consumer could be very problematic on the inflation front, particularly for airlines and travel and that sort of thing. But it could also be somewhat problematic for goods as well, as the Chinese consumer, much like the American consumer and the European consumer, goes out and begins to really spend a lot more money than people think.
So switching back to the US, let's take a look at our ridership in metro areas. It hasn't been discussed much lately, but it was a very key dynamic as the US began to open back up. So what are you seeing in the metro areas such as New York and Chicago?
Yeah, I mean, it's horrible. If you're running a metro in the United States, particularly in the northern states, you're in trouble. I mean, you're nowhere near the ridership that you had pre-COVID. And it really doesn't matter where you look. It's pretty dismal. Part of that is that people don't really go into the office as much, right? If you have a 3-day work week, that takes 2 days off of commuting on the subway. So it's really difficult to see that bounce back in metro really being something. That's kind of the first part, right? We're working from home more. The second part is that we got used to driving in our cars, right? We like doing that. We're a suburban society. We like to ride in our cars, and we kind of like to be alone. Maybe we carpool, maybe we don't. We listen to the radio, we do whatever we want, and it gives us the sense of mobility. And that habit really formed again over COVID, right? People began to drive a lot more, and that has kept up. So there's a decent chance that what you're really seeing here is the combination of a preference shift towards driving again and a preference shift towards working from home, which we've all talked about almost ad nauseum. A 3-4 day work week is different than a 5-day work week.
And we want to take a look next at the airlines. As the number of people flying the friendly skies has returned back towards 2019 levels, are the airlines sufficiently staffed now?
Oh, this is great. Yes and no. So there's Southwest, and we all know what happened with Southwest late in 2022, early 2023. It was an absolute nightmare, and it ended up costing them legitimately billions of dollars to fix it. They were nowhere near staffed and ready for the holiday travel, and it showed. I mean, it was that simple. They also had very, very poor legacy systems, but a significant portion of the problem was that they were not sufficiently staffed. They hadn't really brought on the number of people that they needed to be able to handle the demand. Where I think it gets really interesting is that the United Airlines CEO basically just called out Southwest and said, United's overstaffed by 10 to 15%, and it's costing us a little bit in labor costs, but it's a lot cheaper than having those revenues lost and having to pay out the passengers for readjusting their schedules, for staying in a hotel, et cetera. That costs billions. And if it costs a couple extra $100 million a year to overstaff yourself, it's worth labor hoarding. So there's a really interesting, call it lesson for a reopening, is overstaffing, labor hoarding is real, and it can actually make a lot of business sense.
So what else needs to happen in this post-COVID world in terms of the airline industry?
A lot of things, but one, there's a significant delay in planes that they've ordered. Those planes are much more efficient when it comes to fuel. They're larger, they put more people in seats, and therefore they're a little bit more profitable per plane. Energy, the aviation fuel is one of the most significant costs for an airline, and if you can begin to become significantly better at using that, you're going to have a much better bottom line. So the first thing is they really need those planes delivered, and that's just not happening. That's supply chains, and we've seen Boeing continue to just push out how long those orders are going to take. I mean, they were talking about a return to normality in 2025, and I don't even think I have that long of a time horizon when it comes to really thinking about things. It's just kind of ridiculous. So you do need those planes first. The second thing is that you need more pilots to fly those planes. There's a significant pilot shortage. Pilots are being stretched way too thin. And you need an upgrade in the computer systems. The call it some of the airlines, some of the majors have made those investments, but Southwest is not. And so I think there's a significant bifurcation in who needs to make those investments and how long they're going to take. So there's a lot of catch up to be played here, but I think in a certain sense, it's a positive for the long run, because that's going to bring down the cost of airline tickets. It's going to increase the efficiency, and it's going to be a much better experience, hopefully, for the clientele.
Sam, in summary today, what should we be watching for next as China continues with its reopening process?
I think it's really important to watch the incremental oil demand and where that oil is coming from. Russia took a significant amount of share from Saudi Arabia in both China and India. Saudi was not extraordinarily pleased about that. It put some downward pressure on what they could charge going into Asia. And now that Russia's beginning to step back a little bit from the market, it's going to be important to watch who really fills the gap for India and China. Is it Saudi Arabia? Is it Qatar? Is it incremental barrels from the US? It's going to be a really interesting scenario there. And I think that's going to be probably the main story of a Chinese reopening, particularly in early Q2.
Sam, thank you for your thoughts today, and thank you everyone for joining us. If you have any questions on Arbor Research, Bianco Research, or Arbor Data Science, you can contact us by emailing Gus Handler at gus.handler@arborresearch.com. Thanks again. Have a great day.